Oh yes, oh yes. Oh yes, oh yes. How's everybody doing? What is happening? What is happening, people? What's happening, Melvin? What up, Chino Trades? Cruz? Let's do this. 5 minutes, 5 or probably less. Powerful webinar. This is gonna be a powerful webinar. I know. You know. Let's give people a chance to hop in. 2 to 3 minutes. How's everybody doing? Where are you watching me from? Comment. Are you winning? Are you losing? How do you feel? I do use the midnight open. It is one of my favorite algorithmic price levels. Where is my YouTube comment section? Hold on. Oh, here it is. Houston, Texas. Nice. Nice. Nigeria. Yeah, man. I am winning and losing. I take monster trades, but the greed takes over. Greedy. Yeah, it's one of the ironies of trading. 2 minutes, guys. 2 minutes and we will begin. Do you think we had New York open candle? Trading with Top Step right now? I don't know what Top Step is. I'm sorry. Is it a firm? Broker? One minute. 1 minute. Before we start our powerful webinar, and in this last minute to 2 minutes while we give people the chance to hop in, a short meditation and reflection about your progress, your effort, your focus, your discipline, your dedication, your power, your love, and everything you do to constantly become the best version of yourself. Feel grateful of who you are and what you do and how you do it. Not what you have, but who you are. The things you've done to get here. The things you have sacrificed. Money comes easily when you are focused on yourself and you put your heart and soul into everything you do with honesty, transparency, passion, dedication, and love. You are powerful. You are patient. You are disciplined. You are consistent. Write it down. I am powerful. I am consistent. I am patient. I am confident. I am a profitable trader. Welcome everybody to this powerful webinar that every trader must watch at some point in their trading careers. Not because I said so. It's just simply what it is. It is a powerful webinar. And that being said, we are gonna hop on the charts because I am wasting no more of your time. Welcome, welcome, welcome. I am not a financial advisor. This and every of my content, every video, every post I make on my social media is for my personal use and educational purposes only. Here we are in the 5-minute chart, and I'm just gonna start talking a little bit about the charts and trading, and we'll flow in and out of trading psychology, and eventually we'll talk just about that. The only reason I want to start in the charts right away is to answer a few questions about, well, what's gonna happen now with gold? And honestly, I don't really know exactly because the market is ranging. This is all I know, and just because of that, I am really motivating everybody to be patient, stay away, go in and out, scalp, and let price show you the way. Okay, there is this inside range in between this high and this high over here. And in between this range, we have this other little internal range. And so this essentially is internal liquidity. And the market could easily peek its head below these lows and trap bears and come back to the top. It could also peek its head above these highs and then come back down. It will play with us for a while before choosing and deciding to continue the uptrend. And I'm going to show you a powerful website that every trader must have and must go check to trade gold. This is the seasonality tool, and it is an average of 5, 10, and 15 years of how price behaves, how it moves depending on the month, and we can clearly see that it respects and holds nearly every single projection this tool has. I share this with the VIP people in the Discord. I've shared it for free. I have it in the Discord in the website's chat. It's a tool that every trader should have when trading gold. Now, based on this tool, April was the last month of a bullish impulse in gold since January. We're entering now a phase of consolidation. It's going to move sideways. It's going to have runs up. It's going to have runs down. Your trading should then be sort of adaptive. And I think as a good trader, we should have multiple techniques for trading multiple market structure and behavior. If you like to hold, trade longer, right now is a time in which you might get frustrated because holding in a sideways market might not be the wisest thing to do, because the moment you think you're profit and you're good to go for an extra hour or two, the market is going to turn around and come back down or back above, depending on what position you have. So adapt to this. Know it's a fact. It's a tool. It happens. This is what gold does. The correction started April 21st. Let's go to the chart right here. Where are we? Right here. Monday 21st, April 21st. From the 21st to the 22nd. This was 6 p.m. Eastern Time, New York. Okay? I'm not making this up. You go back in time and see it. So from April 21st all the way to the 30th, which is today, there's a bearish or a decrease in price in the seasonality of gold. So going into your chart, the 21st to the 30th, this is what we've seen. So the seasonality is telling us that all the way until July, we're going to have the sideways market behavior and market structure. That being said, you can start mapping your chart and trying to visualize and imagine what it could look like. I know you probably haven't heard this before, of somebody telling you that trading and projections, you have to sort of imagine what it's going to look like. Well, you know what? That's how I trade. Obviously, I use concepts like liquidity, higher highs, higher lows, a recent high. I target specific algorithmic prices. But in the end, I am projecting the future. I am trying to be a wizard and calling trades. I don't randomly pull them out somewhere, but because there's criteria to this. But essentially, you are using your imagination to see and sort of think and say, does that look like it might keep going higher? Or does that chart look like it's going to push or fall lower? And here's another powerful tip for you. And something I get a lot of criticism, but you know what? I like it. But this is one of the main reasons I do this, guys. I don't draw the market just because I like to draw or I'm good at it. I do this because I know I'm recording images in my mind of market structure and behavior, and it helps me and it will help you. However you can do it, if you can actually draw each candle, amazing. If not, just draw a line. Draw a line of what the market looks like. But here's the thing. We all went to school, at least to some first grade, second grade, kindergarten, whatever. We've all studied a subject, right? What do you do when you study? You take notes. You write things. Why? Because that is the mind's way of memorizing things. Because we're reading, we're writing, and we're recording this image in our minds. So if you're not trying to draw the market, apart from writing your feelings, because that is a journal, right? But what are we doing when we trade? We're looking at a chart. We're projecting the candles. We're not projecting words. We're not, numbers. Yes, but it's mainly the candles. So we're looking at charts every day. And so why not journal that? Isn't that what we're trying to study? Aren't we trying to look for a head and shoulders? Aren't we trying to look for a low? Aren't we trying to look for a trend? Isn't our mind trying to see, I think that's like, is there a diagonal line? Oh yeah, there is. Look, it makes sense. Well, all these things, you want to try and draw them somehow because that is a way of studying. I'm not making it up. I'm not, and it's funny because I get, like I said, people comment like, why are you drawing that? It's like, you just need the charts. Oh, you don't need that. Just go to TradingView. Like, fuck, of course I know I don't need to draw it. But guess what? I do, and it's helping me, and it could help you. Fuck, just like, haven't you thought about that? But anyway, um, journal your charts, because eventually, looking at a chart like this one, eventually your subconscious is gonna tell you, like, you know, maybe it's gonna go down, and then you start to look for factors and variables, and it's like you have a way about buying or selling, and you start putting these variables in one side or the other, and in the end, the idea is to make the smartest decision based on logical and relatively good variables that make sense to buy or to sell. And so one of those variables is the market structure itself. If you have data in your mind, in your brain, your subconscious is going to make this big chip of information. And as you see the chart and as you see the market start behaving a certain way, your brain is filtering your different setups, your different journals, your different drawings, whether you know it, think about it, realize it or not, your mind, your brain has this beautiful like superpower to make a projection, to make a guess, and truly be wizards about this and powerful. So don't take my word. Try it. Just try it. Prove me wrong or prove yourself right. Try it. So your subconscious is going to start seeing these behaviors, and it'll download all the information it has and then filter, and then it'll start telling you that is going to come down. Remember, that's going to come down. And then you go to your journal and you're like, fuck, that actually looks the same. How is this possible? A month ago, gold moved exactly. And haven't you realized that in the 1 minute, it has the same patterns that in the 1 day or the 4 hour time frame? Why do you think that is? That is no coincidence. That is algorithms. This is a game. There's like a script. There's a structure, a behavioral structure. Every session has a story. There's a structure that every session holds until it doesn't. And when it doesn't, each session adapts to that change in direction until it doesn't. And certain sessions are last to change direction, and certain sessions tend to begin a change in direction. That's all I'm saying. I'm not making it up. I'm not just randomly saying. I'm saying because I've been drawing the thing for fucking 2 years, and I'm like, holy crap, this repeats itself. Like, I have to tell everybody. Like, really, this is it. I've been trading for 3 years, trying to figure out a strategy. Draw it, brother. Just draw it. You watch. You develop your strategy drawing the market. Anyway, so part of this, the reason I'm calling it powerful webinar is because we are powerful. The human is powerful. Our minds, and we're these human creatures trying to do robot things. And it's interesting because we have such capacity and the power within us to do so. The only thing is, obviously, as humans, we make mistakes and we just battle our emotions, and it's a roller coaster. But anyway, so going back a little bit and joining the dots of my conversation, so I don't, because it happens, I kind of get lost sometimes. But what are the market conditions right now, and how are we going to adapt? So this is the 1 hour time frame. Clearly, the trades that we take from this push up are different than any trade you would be taking during this horizontal move. What am I trying to say? The V shape, it's just, actually, here's the thing. That is just one setup and one strategy that I've thankfully learned to develop on my own. And it is during bullish trends, during an evident trend that it's breaking higher highs, creating higher highs and higher lows. There are more setups, there are more techniques. I've been trading for years. I could adapt to this and scalp my way around a high and a low. But to do that, yes, the V shape is effective still, but there are more setups, there are more patterns that I'm looking at. And that is one of the topics I wanted to talk about today, and make this sort of like an eye-opening to many traders that are probably still a little bit lost. You know what you're doing, but you just there's just something I just don't know what is gonna click. Is it me? Is it the market? Is it the It is simply the fact that there is not a perfect strategy. There is not a perfect method. This thing is a wild matrix-like environment that you want to learn certain techniques and skills to adapt, to flow, to go in and out, to realize, oh, this is the short-term thing. I've seen this before. This is not gonna, I don't think this is gonna keep expanding too much. I might as well close now. And you're scalping. And then there are moments in which you sort of feel it, you've seen it before, you say, oh, this is gonna keep breaking. I think I'm gonna take my chances. I'm gonna hold this trade, and you'll get a good intraday swing trade position because you're flowing, you're coming in and out. And it takes time. It takes years to live different scenarios. Live an experience where you scalp and you made a mistake. Live an experience where you scalp and you make a lot of money. Live an experience where you took an intraday trade and you lost. Intraday trade and you made a lot of money. Swing trade and you lost. Swing trade and there are an infinite amount of possibilities and scenarios, days of trading, moments, trades that you have to learn, that you have to, the same way you journal, the same way you take notes, each trade is a data point in your brain. And you're recording all this information and you're adding up all this experience. And little by little, you start going back to those moments and remembering it somehow in the present moment and say, I've done this before. I've won money doing this before. And I remember this was actually a quick trade. And then you execute and you start becoming this money machine. Literally, you're flowing in and out. And that's it. Like, that's really a very magical and incredible moment in someone's trading career where they're making money consciously. They're not like saying, how the fuck did that happen? Like, wow, what was that? I don't remember what I did. It happens at first because, right, you're learning. Now, when you know what you're doing and like it's like inside you said, I knew that was going to happen. Yes, there is a degree of luck, or rather probability, right? Where anything is possible. Yes, of course. I'm not saying, because if not, everybody would be quadrillionaires. But that is what being profitable is essentially. Like the probability is in your favor. So you're making these decisions like a wizard. Okay, so going back, and notice how I kind of like go deep into these conversations, but it's cool. This is we have to talk about this. This is something you don't talk with people every day. Going back into this chart, 1 hour chart, 5 minutes. How could we trade currently? Well, based on, and I'm gonna get a little bit advanced here, but based on algorithmic prices like the midnight open, this is right here the indicator, the line popping, that dotted line. Notice how I'm going to go to the sessions now. Here it is. Tokyo, London, New York. So Tokyo selling is not holding or is not breaking highs. It's actually targeting these lows. So before London comes in the picture, we see this internal liquidity range. I'm going to mark it here with this so you can visualize it. What do we have on our left, to the left of that range? We have this high, and we have a few lows. Look at this low right here. This is the New York sessions low. Notice I'm going to start talking to you in these terms. That's not a low. That is not just a low. That is New York's Monday low. Notice the difference. There's a big difference. This is a 5-minute time. This is a 5-minute time frame. That is not a previous low. Or actually, it's not just a previous low. It is New York's daily low. Daily, not the day candle. New York's session, previous session's low. That is algorithmic. Why? Before I even move on, why is this algorithmic? How is it algorithmic? What does it mean, algorithmic? Here's quick thing about algorithmic trading. There's a book right there. I'm not going to go pull it, but algorithms are coded and programmed with time. Obviously, because if time doesn't exist, but that's a very deep conversation I'm not going to get into, but you know, suppose time actually does exist in the terms of like, well, yeah, it does. It's a 9 a.m., 10 a.m. That exists. The whole metric of time. But oof, I almost took a step into a rabbit hole, right? But follow me, bear with me. So, okay, time. These codes, these algorithms are set with time. Why? Because if they didn't have the time of the day, when the hell are they gonna buy, or when are they gonna do what they do? It's like I don't know, set up a timer with no time. It just doesn't, that can't happen. So the time is important. So in other words, the algorithms, the code, the words that are written say, okay, execute blah blah blah, buy this, do contracts, future, past, whatever. But time is always, and is one of the basic principles of these algorithmic machines and these codes. And so this low, which I'm pointing to right here, look at the time. It was 9:40 in the morning in New York. But what does that mean? The algorithms, when they are trading, when the market is here to my right during Tokyo, and when London is about to come in, algorithms, they study the past and they say, okay, what was a low at an algorithmic time? What time was it? What price was it yesterday? Because this is Wednesday. What price was yesterday? What was New York's low yesterday? What was New York's low Monday? What was New York's low the day before? Again, yesterday, what was New York's high? On Monday, what was New York's high? What was the close of London? That is how these algorithms are making these calculations, and that is actually how every indicator works. They go back and they study a number of candles in the past, and each candle has a price and a time. So, that being said, below this range, we have New York's sessions low. Okay? Right here. What else do we see? London sessions low. Right here. Yes, that's a low. A low, but it's not a random A low. It is an algorithmic low, because that has a price, and it was London sessions low. And here we have Tokyo's sessions low. That's interesting, right? That's fascinating, right? You know, it's off there for a reason. One little last low we have, London's Friday low. Sorry, New York. I'm going to mark that with a horizontal line. So as we extend these to the future, and this one, because again, we have to see if price wants to go up or down. If it goes up, we know what's going to target. Those highs, or if it goes down, you know what they could target, those lows. I know what everybody, or not everybody, but a lot of people might say, oh, you're saying it just because it already happened, and then, you know, it's easy to say when it's like, man, if only you join the VIP and you see what we do and how we work and the way we're calling these, like the market behavior, you are going to do this eventually. So anyway, when price with London does decide to sell off hard, the first target, notice it was New York's Monday's low. And almost just above, before reaching that low, we had a midnight open right here. That was Monday's midnight open, which is this dotted line. If we extend it, that is an algorithmic time that the market successfully reaches when London sells off. Okay, again, I don't make this up. Go back, look at your charts. This happens over and over and over. I see a lot of comments about the V-ship is real. Awesome. We're going to have a giveaway in the end. Somebody's going to get a nice lifetime access to the VIP. So anyway, look at how London goes real quick into that midnight open and takes out New York sessions low of this day. Does it stay? Does it bounce? It doesn't. It continues and it takes out London's Monday session low, and eventually it retests and takes out just a little bit below Tokyo's low. Is it a coincidence? Oh, that's a fake out. Oh, that is a bear trap. Or yes, but in other words, and what's really happening is algorithms are simply targeting that algorithmic price, which was a previous session's low. It's grabbing liquidity below these lows, and then it's expanding back into the range it was previously in. So how do you trade this? Well, when you see these rejections, you can buy and get out anywhere around this, you know? Okay, what happens now? We see the market struggling to get back above into the highs. Here's another trick for you. We're going to measure that range, and we're going to see how the 50% of that range is going to behave in the future. Okay, I'm grabbing this low right here, and I'm grabbing that high right over there. It's the widest range that hugs, or it is also holding all these candles. And as I extend it to the future, that 50% range serves as a pivot area. Okay? And notice how the candles show it. Here is a resistance, here is a support, here is a resistance, here is a resistance. So now, because price didn't cross above these highs, it's targeting previous lows. You go easy. You go to the most immediate and obvious and safest. When I say safest, it's because it's very likely to get there, right? This is a very easy target right now. It could respect it, and it could or it could take it out. A different target would be this low. We don't know if it's going to get there anytime soon, or if tomorrow when Asia opens, or rather in a few hours, we don't know if Asia is going to come back around and take this high and then come down, or if it's actually going to go straight through this low. Because this low is so close, is the safest low. But where am I going with all of this? Because this is just a market analysis. Adapting to this is key. When you can hold a trade in a bullish trend, now you go in and out when you know it's going to range up and down. All right. How's everybody doing so far? Comment 555 if the connection is good, if you can hear me loud and clear, if you're understanding everything. What is popping? Who is in the chat? The V-ship is real. It is. Oh, it is. Okie dokie. So adapting. Adapting is key. Definitely. Appreciate it, Melvin Safam. 555. Amazing. Let's keep going. Let's keep doing this. Let's keep doing this. Seasonality tool. Seasonality tool is telling us we're going to move sideways basically until mid-July. Now, historically, I've seen July be bullish. It's not every year, but it doesn't take more than a week to make its low, and then it'll start expanding higher. So if I zoom out a little bit and we look at higher time frames behavior, this area right here is what I think a potential low that the market is going to want to retest during this sideways movement, right? So let me clear the chart a little bit and notice how we have this wider range of consolidation. Does this look familiar to you in the lower time frame? Doesn't this bigger picture look similar to this? Right? It's not perfect, it's not exactly the same, but the behavior seems to be quite similar in the sense that we have a big high over here, we have a little area of consolidation after a drop, we have these lows that the market went to retest and bounce back above. So this drop has now this area of consolidation, and it seems like price is actually showing us it's trading down. So what am I going to think? What am I going to, what's the logical thing to do? Well, follow price, like see what it's doing. And it's right now, it's starting to want to trade into these lows. Will it break? Will it come? I don't know. We'll see when we see. But if this behavior repeats, then we might be getting close to this spillover and lower dip from this area of consolidation, and that would look something like this. Just a little more, a push a bit lower, sort of a little bit like this push down, because if you measure this push down, it's almost the same way the market went to test these lows. So you could say that there is a chance that if price breaks those lows, it might move relatively the same distance, maybe. What do we see? I personally don't think it's going to go that low, because normally you have gold being very efficient and it shakes hands with, or it touches previous highs with efficiency. What does that mean? Look right here. Look right here. These highs right here, market touches those with these highs, those lows. It's almost perfect. It is almost perfect how the market shakes hands. In other words, this high that the market broke out of, all this time it was above those highs. After a correction, it went perfectly, touched those. The market balanced itself perfectly, and then it continued expanding. What do we have now? This high, the market has been trading up above it. It's starting to correct. We could see that extension of that correction to those highs, and maybe that's where the price might eventually bounce. How would I look at this based on time? If price gets there by a day in which the seasonality is lined up to be bullish, then that is how these variables are lining up, right? You see what I'm saying? So different would be if I, for example, say like, I don't know, imagine we were looking at price around here when it was going up, and we're saying, wow, gold is already at too high, this is the top, this was the correction, it's going to come down. If we go to the seasonality and we look at the days, that was maybe April, let's see this. This was April 16. So we go to the seasonality, April 15, 16. It's a very bullish day historically in the seasonality. So would it make sense for me to think that was the top? Would it make sense for me to look for a short trade when the seasonality is telling me that historically 5 years on average, 10-year and 15-year on average, gold goes up? You see that? That's a little powerful secret right there. It's not a secret, but many of you probably didn't know it. Well, same thing over here. As price expands, as it's coming down, go to the seasonality and ask yourself, is that it? Does it make sense? So for example, right here, from the 30th to the 1st, there's a dip. What is today? 30. That little dip might be what's coming next, right around here into this area. At least to those highs right there. At least those highs. If it goes lower, fine. Where can I see the chart from the seasonality? Insider Week. InsiderWeek.com. Okay, so again, seasonality, we have a dip, and then what happens in May 1st? The beginning of a month. So the market is going to look for consolidation, manipulation, distribution, is going to look to manipulate, is going to look to create a low, a high, and based on the seasonality, on the 1st, there is a rejection to the upside, sideways move until May 7, and then May 8, we have another dip, May 9, a bounce back up. What is that saying? If we were to draw the seasonality, it's saying from today till tomorrow, there's going to be a drop. Tomorrow is going to be a rebound, sideways move, and then another little drop, and then another rebound. Will it look exactly like that? I don't know. Will it hold that general direction? It should. It could. It's respected 10 years on average. It's done so 5 years on average. Why would it not do it this year? That's probability. That's what you take your chances. There are ways to see market structure. Again, the information I've posted, I've shared with you, is there is a way to time the market based on the seasonality tool and based on each session's behavior. So if we go to the sessions, adding to everything we've been saying, the sessions must hold and must tell you that story. So right now, New York started selling during their PM session, and I've said it, I've shared it in the Discord, in my Instagram. The PM session in New York is powerful because it tends to tell you what New York wants to do the next day. If New York buys after their 2 p.m. session, they're telling you it's likely that it'll expand higher. If they're selling, it's likely that Sydney and Tokyo open with that direction, and it's showing it right now. Sydney opened and it started trading down. Why? How come? Well, obviously we're moving sideways, but one big factor is the PM session. Okay? So again, from today until tomorrow, we might see that just a little expansion to the downside. Okay, seasonality tool, powerful tool, use it. Please start using it. All right. Continuing, before making a little pause about psychology. Remember I said at the beginning, we're trying to imagine what price would look like. Remember I started explaining to you that I sort of draw the market and it's helped me to sort of envision the future. That's what you're trying to do. So based on the seasonality, we see that from the current point in which the market is in, which is right there, 30. Look at this May 19. It's lower than when price is here today, 30. So in other words, from today until May 19, historically, there has been a lower direction movement. It has ups and downs, But on May 19, in other words, on May 19, price has shown that it's lower than it was on April 30th. So let's try and map that out. Let's imagine how that would look like in the chart. So what I'll do is I'll put a vertical line on May 19. 6, 9, I'm going to go to the 1 hour chart because it's a bit farther to our right. May, right here, May 19, right there. May 19, 12 a.m. Eastern Time, New York. That is the day in which the market historically has been lower than where price is today. I'm going to repeat that. May 19 has been historically the day in which price has been historically lower than the price that it is at today. So we have all of this distance, all of this empty space to fill. And we have a very powerful information, which is historically price is lower. So I'm going to ask, will it make sense for me to say this? Not really. Why? Because the seasonality is showing us that, again, blah, 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 May 19, 15 years, 10 years, 5 years on average is going to be lower. So what does that translate to? Well, this maybe meh. So we already have valuable information on our favor that the market might want to probably just start coming somewhere, something like this. However it does it, I don't care how far it does it, because I don't know how far it's going to drop. I don't know how far it could come up before it drops. I know historically until when it could drop. And all I do is I go into the past and see important price levels like this high, like a few midnight opens, like London's low, New York's low, this is a session's low. Why? Because market has proven and shown that it targets those prices. Not because it was a low, not because it was that low, it is because it's an algorithmic low, session low. New York session low, London session low, Tokyo sessions low. So what do we have here? Look, that's not a coincidence. New York sessions low, Tokyo sessions low, New York's and London sessions low. These are targets, algorithmic targets. This session's high. What do we have here? This high, which is a historical all-time high that price hasn't balanced with yet. Only this little candle has it, but that candle itself doesn't have a retest yet. So this is internal liquidity that the price is likely to retest and grab liquidity from and later bounce. When? You know when. Reaching Monday, 19th of May. And this is being recorded, is going to be up in my YouTube, and we can all go back to the video, and on May 19th, let's see what happens. Let's see if some of this plays out. Okay, what other targets might gold want to go retest? Potentially the 3,000 algorithmic and psychological price. I'm not ruling it out. I think there is a possibility. The trend is your friend, but if central banks are buying at very rapid pace gold and they want to continue doing so, it's obviously not a business to buy again now. And they're going to want to lower the price, put a lot of pressure, sell, and shake people off, induce people to sell gold, start putting the news out there saying, oh, gold reached the top. Oh, the bull run is over. Don't be surprised if all these, media news and YouTube people start hating on gold between now and July, when historically it just moves sideways and potentially lower. And a bunch of people, oh, I told you gold, but I told you that was the top. Oh, yeah, gold is over, blah, blah, blah. Everybody's going to start panic selling it. And then reaching any algorithmic level, like a previous high at like 3,150, or maybe it does get to 3,000 or 3,100. I would love for gold to bounce at 3,100. You know why? Because that is a perfect price that traps bears. And people are going to say, I told you, blah, 3,000, gold is going to go back below 3,000. It's the perfect price for people to get induced into selling and smart money to really get fucking the guns out and buying so much. It'll just slingshot gold back above 3,500. So my favorite price for gold to rebound is going to be 3,100 and 3,150. I'm going to call it right here. I don't know if it's going to happen. Maybe it does. Maybe it doesn't. But that's what I'm not. Why am I saying this also? Because when gold broke 2,000, you want to know the price that it actually respected? 2,100. Let's go back in time. Let's go back in time. Here we are, 2,000. It broke gold 2,000 right here. We finally broke the 2,000 right here. 2,100. Oh, it didn't even get to 2,100. It stopped at 2,150. 2,147 to be precise. Why? Look to your left. Look at this wick. That's not just a wick. That's a 1 hour wick. And that is a high. That is 7 p.m. Sunday, December 3rd. That is Asia's high. When gold broke out, it held that high because the market is efficient. It shook hands with it and it just slingshot and it bazookaed its way back and just above and beyond. So where is that? 2,147, 2,100. So we go to the present time. What do we see gold? 3,162 and 3,100, which is right about here. What is at 3,100? What do we see? Look at this. We see this high, this New York sessions high, this breakout of that high, and the market failed to shake hands with it precisely. These are also New York sessions low and London's low. It is likely for market to come, fill in this imbalance, this gap, that if I go to the 4 hour, the 4 hour has this big imbalance over here. Nope, that's not it. Right over here. This empty area, right? The market is going to want to fill that space at some point. It's likely, it's potential. It has potential to go there. And right when it's sneaking its head back into this range, it'll bounce back up. Okay? All right. What am I missing here? V-shape is real. Haha. Yes. The V-shape is real. 1st of May is low according to the seasonality. It's not the month's low, but is a low. Notice how from May 1st until May 8th, there's a little bull run. Then there's another correction, sideways. There's a little a spike up, then a spike down, a spike up, a spike down. It's going to range. It's going to be ranging. So, and what I'm pointing out to is that May 19 is lower than the price of today. So that's valuable information that's telling us that gold might want to move sideways in a diagonal manner. As long as we see the market structure holding it, we can continue to trust it. It's done so historically 5, 10, and 15 years on average, so probability is in favor of the seasonality. And that is where adapting comes in. That is where strategies have to be different depending on market conditions. Okay. That being said, and adding what could come next is July. June 26th until July is going to start expanding back to the top with strength. Some years it hasn't done so immediately, but generally it continues to expand the year. Okay, so that would look, if we continue to our right, May, June, well, that's a long way, but whatever. You get the point. You get what I'm trying to do and how visualizing looks like, right? Because it's a chart analysis type of thing. Okay. Anyway, V-shape is real, the realist. We are 1 hour into this powerful webinar. I'm going to do 5 more minutes of charts, and then we will start the psychology aspect of this to really get deep about trading. Trading is way more than this, than analyzing price. We are analyzing ourselves. And I'll give you a heads up. The giveaway is for the comments in my latest Instagram reel. I'm liking these comments about the V-shape on the YouTube. I will take them into consideration, but I'll remind you, you have to go to the reel. So 5 minutes, if anybody has a question about charts, I'll answer 1 or 2 questions about charts in these next 5 to 10 minutes before we start talking about psychology and touching a few topics that I think every trader must listen to and reflect on. Chino Trades, you were my first comment, indeed. Oh, were you? On the reel? That's interesting. Does V-shape work both ways, up or down? Excellent question. It does not. The V-shape is, well, you will see it. You could see it during a bearish trend or a bearish direction, but then what that V-shape would represent is just a pullback, and the market will eventually go back and take it out because the trend and the general direction is bearish. So the V-shape, right, like the truest V-shape is during a bull market. Okay, and you'll see it like very powerful during the New York session, because the market, what it does, and again, each session is going to tell you, but the market is going to be holding bullish structure, and as it goes up, it consolidates, and then it manipulates, and it creates the V-shape, and then it continues to expand hard, and then it consolidates again, it comes down, manipulates, it balances maybe the previous highs with a V-shape, and it continues to expand, creating higher highs, because that is the trend. It goes higher low, higher high. So this is where you'll see the V-shape. In those moments in which gold manipulates, or the market like induces selling and reverses, because that's the natural bull and uptrend, right? And you could do this in lower time frames. So this could be 5-minute highs, the market come down, and you take a buy within the session, and you get out. And or this could be the 1 hour time frame, the 4 hour time frame, and you'll essentially be getting swing trades opportunities. So this could be Monday, this could be Tuesday's low, this could be Wednesday and Thursday, and then this up here would be Friday, and then this is the next week's low. So Monday, Tuesday, and so on and so on. So the V shape is a very powerful system that once you start following price based on the seasons, based on the sessions behavior, you're going to identify these nice entries. So for example, right here, look at that V right here. Inside these candles, because this is a 30-minute time frame, but inside this 30-minute window of time, there's a V shape right here. That's a V shape right there. V shape right over here. So there's multiple V shapes as price comes down. V shape right here, little V shape, V shape. This is the 30-minute time frame. If you go into the 5-minute time frame and you see how price was going up, creating those lows, look at these lows over here. There's a V shape right there. 1, 2, 3, 4 above, 5 right over here. Little dip, manipulating. So this is the consolidation. This is the little manipulation creating that V down and up, and then that is the expansion. Over here, look at another V. Boop. This little drop and back up. Huge expansion. But why is it so pretty? Why is it so perfect? Because it's in a bullish trend. On the downside, look, this was a V right here. You see it? That little V, symmetrical down and up. What happened? It did offer a nice push, but we were already seeing the market create lower highs and lower lows. So it was going to help. It was going to offer a very short-term trade. And it's actually interesting because even in bearish trends, even in a bearish corrective market, the V shape appears and it offers a probability of success. But as you see, it's definitely, obviously not the most potential. It's best potential. So in a downtrend, I see people commenting A shape. You have to switch your mind to look for the A's, which is this one. Look at that spike up and down. You see that? Over here, up and down, symmetrical. That's the A shape. The A shape occurs in a corrective market. There's another A right here. Look at that little spike up and down. You see that? So there's another A right there. So it's basically you're flipping your mind sort of and saying, okay, I'm going to look for a nice correction up and then a big drop. And the A is going to help me know when that drop is likely to start. Have you heard of W's and M's? I haven't heard, but I've seen them. Like I've seen the market make, like, here's an M, for example, right here. There's 1 and 2 right next to it, right there, right? What my mind just sees is that is the highest high before the drop, so I'm looking at the A. But yes, I know what you're talking about. W's and the V. This is the W right there, sort of. You see, but this is actually just, in my mind, this is head and shoulders, because the neckline holds. The V has a big push breaking this, and it doesn't leave a neckline. Okay. All right. Okie dokie, 7 minutes of question. Thank you. Who asked that? MUG. Nice. All right, psychology, people. We cannot ignore the fact that trading involves, and it's actually more about ourselves than the charts. By the way, if you're still around, I appreciate it. Subscribe, like, and share. I'm not really a YouTuber or an influencer, so I don't know exactly what to say besides this. So yeah. Ah, powerful webinar. Nice. Nice, nice. Let's do quick 2 minutes of nice meditative music before we move on to our trading psychology aspect of our webinar. 555 if you're feeling the power, your power. Grab a journal, your journal. It is time to reflect. I also appreciate you, Amin. I appreciate that you appreciate. Yes. Yes, yes, yes. Let me pull something up real quick. Let me pull something up real quick. That's it. That's it. Let's do it right here. Yes. Oh yes, oh yes. Trading, man. So ironic. So ironic. My problem is I see the trades in gold. I enter nearly always perfect. Then I close in a gut feeling. I see it consolidating and I see it pushing again. Then I jump the gun because I want more. Okay. We can start there. Thank you. We can start there. The universe has brought all of us together today. Yes, indeed. Indeed. Two minutes. 2 minutes and we'll start reflecting on what Melvin said. But take 2 minutes to be in silence with yourself and the music. Nice. Nice. So we all have our books, our journals, our notebook, and I would like to kindly ask everyone to write, why do you trade? Why are you trading? Do you want to make a specific amount of money? Is there a mission that you set yourself into? Are you trying to prove a point to somebody, to someone? Why do you enter the charts and trade? Whatever that is your purpose, that is your north. Freedom, you want to buy a house, you want to pay your debt, study something, write it down, reflect on it. And we'll start talking about greed. Interesting. There's a difference between ambition and greed. When you get out of a trade too early, is that bad? Why would it be bad? If you're winning, how is that bad? You knew it could. You thought it would. Had I? What if I? That is a double-edged sword. That is a dangerous game. Dangerous thoughts to allow them to take over. If you have a system, if you have a schedule, if you have a plan, if you have a model, a strategy, follow it. Try to stick with it like if it was, like if your life was on the line. Trust the system. Trust yourself with the system. I trade with 1 to 3 entries, so that when I close one, quote unquote, too early, I have another one or another 2 as backup in case price continues moving in that direction. That's one thing you could do. But the first thing we must consciously try and really make the effort to do is change the thoughts, change the idea that closing early even exists. Because if closing early as a whole isn't a thing, we just closed the trade. I'll repeat that. If closing early wasn't a thing, we are simply closing the trade. Wow. We're winning. We got more money. How do we know we closed early if it doesn't exist, that's not a thing? Oh, but the market kept going. That's so I could have you would have, what if? You're not taking a step forward. You're going backwards. You're going back into the idea that you thought you should have. Closing early isn't a thing. Closing too early is not it. Time doesn't exist. I'll go deep about it. Time is an infinite present moment. It's always happening now. This now. It's now, forever. It's a vibration. So, you're closing the trade. You're not closing too early. You close the trade. You won. Good job. Repeat that. Oh, I see market. It's moving. It's continuing to expand to the up. Buy. Close again. You got more money. Oh, it consolidated and I thought it was going to continue and it's continuing. Buy again. Close again. You got more money. Oh, I see it's trying to reverse. That might be a pullback. Maybe I can buy again. It took me out. Stop. 3 positive, 1 negative, 4 trades. Perfect. Get the fuck out of your house. Yeah? So closing early doesn't exist. You created it. You developed it in your mind. You put yourself in that idea. You caused the stress. Allowing yourself to think and believe that you closed early. You didn't close early, you won. You got money in your account. After the 4th losing, when I start tilting, now you are pushing your luck and your revenge trading. That is when self-control has to come in. That is when money starts to be addictive, and that is a personal thing. Where does that come from? Why are we reaching the point in which we lose what we made due to overtrading? Why? It's not the market, it's not the strategy, it's not that, oh, I had to adapt and then sell. No, because that's doing more of what you're not supposed to. You make a goal, you make a trade, you stop. Why? Why? You want to know why? Why are you trading? Don't you have a purpose? Don't you want to buy a house? Don't you want to pay for your surgery? Don't you want to pay debt? Don't you want to be free? The minute you overtrade, you're going against all your principles. Because when you have profit, you've added to your purpose. And when you overtrade and you start losing again, you're subtracting, you're taking away from your purpose. And the market tells you when to stop. It is your job to realize and listen. It tells you both in two ways. A very positive one, and a hard one. I'm not going to say negative because we shouldn't think with negative words and thoughts. The very good positive way is you hit your target and beyond. The relatively good is you hit your target. There's another one hidden there, which is like you didn't get your target, but you won. And the hard one is you lost. When you learn to listen to the market, which is an everyday conscious decision, you'll start feeling more and more confident. And you won't give in to greed or your insecurity or any expectations. Every time I get into this spiral, I feel my future self crumbling. You said that. For how long are you going to think that's what happens? For how long and how many times are you going to allow yourself to think that's what happens when you lose a trade? I'll rephrase my idea, the point I'm trying to make. Let's say you and we're walking. We both have shoes on. My shoes break. Okay, follow me. This is gonna be fun. Hear me out. We're both walking. My shoes break. And I tell you, bro, my shoes broke, man. Fuck, my shoes are broken. My shoes are broken. Oh my god, fuck, I can't walk anymore. My shoes are broken. What am I gonna do? You tell me, here's a new pair of shoes. You tell me, alright, that's fine. Here's a new pair of shoes. I put them on, I'm walking. My shoes break again. Bro, my shoes are broken. What the fuck? My shoes broken. I'm choosing to think and react in a apocalyptic way that my shoes are broken, when I know I simply get another pair, change them, put them on, keep walking. You broke your shoe, you fix it. You put another one on, you keep going. Shit, my shoe's broken. Okay, I got this. I just have to change it, keep going. But I'm choosing to interpret the way and see it and understanding differently. My own head is looking at the shoe and saying, okay, well, that's not a problem. I know what to do. I've done this a million times. I could do it, you know. When I lose a trade, I feel like my future self is crumbling. I hate this. This is not for me. It will be like that every time you choose to think that. Until you lose a trade and you say, damn it, what did I do wrong? Okay, I understand. I'm gonna try and really make the effort not to repeat that. In the end is inevitable, so that's fine. I lost today, I know I can make that tomorrow. That'll completely relax you and calm you down. It is your job to put yourself in a situation in which you are calm. Knowing when to trade is absolutely a must. I think one of the stepping stones and sort of the next level, if you want to call it, in trading, one of those next level moments is when you have more self-control. We could become masters at this, but we're human. There's gonna be a day in which we're greedy and we'll just learn our lesson. The goal is to have less of those lesson days. And that stepping stone, that next level moment, is when you open a chart and you are able to wait and be patient and do one of two things. One, wait for the market to offer you the setup, or two, not even trade, because you'll recognize a behavior that doesn't align with your plan, with your setup, and you consciously choose not to trade, and you are free from the charts, because it could get addictive. It could get addictive if you choose to. If you decide to stay there and feed from it instead of taking advantage of such powerful tool we have to be free. I should think more like a machine. Interesting. Do machines think? I believe what you're trying to say is I should cancel the noise. ChatGPT does. That's a good point. I think thinking for a human is a bit different, obviously, than for an algorithm, right? An algorithm will just analyze data and then develop an output of information, whereas a human has an intuitive sixth sense and it's able to sort of think differently. canceling the noise is, I think, a way to act machine-like, because you're able to only focus on what you're seeing in the present moment and the data you're analyzing in the chart and just making and executing decisions. You're not allowing yourself to get trapped in either external source of information or even your own mind that, as a human, tends to look for invalidations. And this is something that could be tied to our childhood and to who we are as persons, right? As the person, the personality that we've developed since we were children. If we grew up in an environment where we were constantly getting told we're doing the wrong thing, even if we weren't doing the wrong thing, if we were doing something differently than what was expected of us and the person didn't know how to communicate it, we could have interpreted that we're doing the wrong thing. I'm going to repeat that. If we grew up in an environment in which we were doing something differently than what was expected of us, and the person telling us we weren't doing it that way did not know how to communicate the words he or she chose, had an impact on us, and we could have interpreted as a negative impact, and it programmed our minds to think and believe that when we try and do something is wrong. And so we tend to look for self-sabotage moments and think and look for things that are wrong when they're really not. This could have been a teacher, this could have been a parent, this could have been an uncle and a cousin, a friend, somebody angry, somebody who wasn't being loved and always took out that energy on us. And without wanting to or knowing, we had that program in our minds, and we are bringing it into trading because trading is a big mirror. And when we are in a winning trade, that self-sabotage mechanism triggers, and our subconscious goes all the way back to when we were 7, 6, 8 years old, when that teacher, when that aunt, that father, that cousin, that brother unfortunately kept telling us, that's not how you do that. Stop it, that's wrong. And you become your own enemy. And so every time you're in a very good situation, in your charts and outside of your charts, you end up doing something and it messes it all up. It's not you. It's not God who doesn't want you to succeed. It's not the universe that, why me? There's an explanation. And all the answers are within you. The moment you understand where that comes from, you heal. Because healing is to understand, to accept, and to love. If you grew up and everything was given to you all the time without an effort, you're going to tend to believe that every time you trade, you have to win. And you can't take a loss because you've never had someone say no. Because you were loved. There was nothing wrong. No bad intentions. The same way that the teacher, the cousin, the older brother was telling you, that's not how you do things. It's like this. Because he or she wanted you to be good at what you do. They just didn't know how to tell you. That same intention for you to be a better person comes from a friend, a teacher, a parent, an older sibling that spoiled you, always gave you what you wanted, never said no to you. And so you develop this overconfident sense of being and personality. And unfortunately, it's translating in your trading when you get these Superman moments in which you don't close a trade and it turns back around and you get pissed off because I should have closed, I would have closed, or you start losing and you say, "What? I can't lose. No, I'm gonna revenge trading." Yeah. So, who are you? Is a big, big, big stepping stone and another next level moment in trading. Identifying who you are. Where do you come from? How are you today the way you are? Literally, how? Well, like, what happened? What circumstances during your lifetime triggered, created, programmed certain beliefs in your mind? And how can you today consciously, purposely, with good intentions, change that for good? Reaching a level of profitability in trading is tied to and almost directly, if not mostly, depends on your capacity to understand yourself. Again, reaching a level of profitability in trading is directly tied, if not depends almost entirely on your capacity to understand yourself. I would kindly ask you to write that down. Reaching a level of profitability is directly tied to, if not completely depends on your capacity to understand who you are. Lovely, 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 lovely. What is happening, people? How's everybody doing? What have you guys been up to? Talking about CHF. Nice. If you see the V shape, that's it. The V shape is real. So I don't know exactly how many have commented on the reel. I did filter the contest so that it would choose comments with the word V-shape, with the words V-shape. So I will give everybody one more chance to go into the reel and comment the V-shape is real, because the filter of the contest has and contains the phrase V-shape. If you commented, you should be on there. Melvin, you're already in the VIP. That's this guy. But if you want to comment, you can go comment. It's my latest reel about the $1 million secret in gold. I am giving it away. I'll give you guys a minute, 2 minutes if you haven't commented on the reel. If you've been commenting on the YouTube, I appreciate it, but I already set up this website so that it's using the reel, and again, it is filtering out all the comments and choosing only the ones that contain V-shape. So I'll wait one more minute, and I hope you have been enjoying this powerful webinar. Like it, comment on it, share it. We are almost done. Almost. By the way, if somebody that is already in the VIP wins, I will repeat the contest. Unless, well, yeah. I can't do anything else. One minute. And I think we should change the music for this moment. So let's get some. Who here plays GTA, Grand Theft Auto? Because I really like Flash FM.
This mouse backpack is
I don't care about the mouse backpack. I care about.
Understands you. We do. Flash FM, music for the me generation.
There's another one. There's another one of this that I like better. We're gonna rock and roll to Flash FM music, picking our winner in 2 minutes. No, 1 minute. But let me just get that video because I like it better. Where is it? Is it Flash FM? Where is it? Ah, here it is.
And electronic ash.
Yes, this is it, people. We are very close to picking our winner. Bear with me.
This is Flash FM.
Hello, America! Wake up and go to bed with Terry and Tony.
This is when I'm driving that Lambo full speed, crashing into everything and everybody. Just like, 30 seconds, people, 30 seconds.
You gotta get him somehow. I think you got to slow down.
30 seconds.
I think you're headed for a breakdown. So be careful not to show it. You really don't remember. Was it something that he said?
And
Voices in your head.
oh, that's a bummer.
Don't you think about it?
This is one of those epic moments. I saw it coming. It's not free. All right, let's go to another website. We can do this. I don't think this is gonna do it right. Let's try it. This is not gonna pick. This is not gonna filter out the comments. Maybe it does. Okay, number of mentions 1, number of winner 1. Let's see if it gets a comment that says the V-ship is real. I don't get it. Excuse me, guys. I've never done this before, so I didn't have. Up. Ho ho. Chino trades, brother.
IBK, our global analyst, lets you easily compare.
I don't care about interactive bro. Sorry. Chino, my bro.
You can win money just by listening to this station or servicing a bouncer.
You made it, brother.
I get with snakeskin pants.
You got a short circuit? Calm down over there. Anyway, thanks to you, we are Vice City's top pop station, baby.
Even the radio station is clapping for you, bro.
Especially from the record rep who just bought me 3 grams of snort. I jump his bones just because it's
All right, people. I am very grateful for you all. I'm glad you were here. I am extremely happy for everybody who have been really focusing and being disciplined and consistent and believing in yourself. So congratulations, Chino Trades, for your lifetime access to the VIP. I'll be in touch with you soon. And congratulations to everybody, honestly, from the heart, for sticking around, for being consistent, for being disciplined, for being confident, for trusting yourself, for following your purpose. Don't forget your north. Don't forget your purpose. Trust yourself, believe in yourself, and really, really never give up. Never, ever give up. I've been doing this a long time, and despite the downs, I've learned to control myself, to think, and always know that it's part of the process. I should embrace it. I should accept it. I should thank the process, be grateful for it. And that's it. It's a long ride, but it's a nice one. If you have any questions before we go, let me know. But other than that, the powerful webinar came to an end. So, goodbye, everybody. I've got to go. Gotta leave you all behind. You know the song. And face Mama. Dun, 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 dun.
Is this just fantasy? Caught in a landslide, no escape from reality. Open your eyes, look up to the skies and see.
The V shape is real.
I'm just a poor boy, I need no sympathy, because I'm easy come, easy go, little high, little low. Anyway the wind blows doesn't really matter to me. To me.
Nice. That is a beautiful a cappella. You got tricked, huh?
Mama just killed a man, put a gun against his head, pulled my trigger, now he's dead. Mama.
Life had, you know it.
1, 2,
1,
3,
4, 5. I'm teasing everybody. I know. Don't get angry. Okay. Fine. Let's do it. Let's do it.
Reality. Mama just killed a man, put a gun against his head, pulled my trigger, now he's dead. Mama, life had just begun, but now I've gone and thrown it all away. Mama, didn't mean to make you cry. If I'm not back again this time tomorrow, carry on, as if nothing really matters. Too late, my time has come. Sent shivers down my spine, body's aching all the time. Goodbye, everybody, I've got to go.
motto of a man.
Scaramouche, will you do the fandango? Thunderbolt and lightning, very, very frightening me.
Galileo, Galileo, Galileo Figaro.
Magnifico!
I'm just a poor boy, nobody loves me.
He's just a poor boy from a poor family, sparing his life from this monstrosity.
Easy come, easy go, will you let me go?
Bismillah, no, we will not let you go. Let him go. Bismillah, we will not let you go. Let him go. Bismillah, we will not let you go. Let me go. We'll not let you go. We'll not let you go.
Let me go. Oh, mamma mia, mamma mia.
Mamma mia, let me go. Beelzebub has a devil put aside for me, for me, for me.
So you think you can stop me and spit my eye? So you think you can love me and leave me to die? Oh, baby, can't do this to me, baby. Just gotta get out, just gotta get right out of here. Nothing really matters. Anyone can see. Nothing really matters. Nothing really matters to me.
Take care, everybody. I hope you enjoyed this powerful webinar. You are powerful. You are confident. You are patient. You are disciplined. Bye bye.